Good morning, traders. It's 8:01 a.m. Chicago time on Wednesday, the 10th of November, 2021. This is episode number 2113, CPI Day. CPI Day today. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Um, this morning we had a blockbuster number here that has moved us a fair amount, or is expected to move us a fair amount. The big fear, inflation. Wow, my news feeds are just rambling. Um, U.S. CPI came in the highest it's been in 3 decades at 6.2%. 6.2%. Remember, the target value is 2% for the Fed, so there's a long way to go there. And that's really the headline, the key headline today. We had core inflation at 4.6%. The consensus was 4.3. Prior is 4%. The inflation year on year at 6.2%. The prior is 5.4, and the expected is 5.8. So climbing. Initial claims hitting a record low here in since the pandemic started, 267,000. Expected 265,000. So at least that's going in the right direction. Core inflation 0.6% for October versus 0.4. Month on month 0.9 versus 0.6 on U.S. inflation. Ahead of us, we have wholesale inventories, the crude oil inventory the report, the 30-year bond, the monthly budget statement today at 2 Eastern, and Australian employment numbers later in the afternoon. In terms of earnings, Adient and Perigo pre-market, those, let's see what those did. Let's see how big they are. Revenue for Adient is 3.11 billion, came in at 2.77, so surprise to the downside, but earnings were better by 59%, still losing money. And then Perigo is $1 billion company. We're looking for Walt Disney after the close. I think Walt Disney, if I may be wrong on this, but I think Walt Disney pretty much closes the earnings season for all major stocks. Walt Disney is estimated to have earned $16.26 billion and 44 cents per share. BRF expected at $2.19 billion and 2 cents per share in earnings. So look for Walt Disney after the close. In terms of what we've got, we have a mixed market. The big issue, of course, is the U.S. inflation report. Metals have been rallying. I talked about it yesterday. Metals. Gold has taken off. Silver's lagging, but gold has really pushed higher since Monday, I believe. And then also China's PPI came in at a new record high as well. I think the number is like 13.5% or something. I don't remember. I may be misquoting that, but the S&P mainly balanced. The volume's relatively high. The volume was relatively high before. Oh yeah, Rivian. That's like a $78 billion IPO. Just these numbers are insane for these companies. Anyway, the S&P volume was higher pre-market, and 220,000 contracts. The overnight inventory is 96% below. The volume traded was 96% below settlement, 23.5 points of range higher than the mode of 23. The point of control of 46.61, and the low is at 56.75. Now, if you recall yesterday, I outlined some. I'm not doing the review anymore, but let's take a look at what happened yesterday. Here's the review segment. Pretty busy day, as you can see from the chart here. Really a lot going on. So we had a lot of rotations. You can see this chart's taken up the entire screen. Love to see that. And I outlined a key scenario yesterday that I would like to see, which ended up coming into actually coming into fruition. I talked about, and if you go back and play yesterday's video, I set up a key trade, and that is if we get down to 75 and we breach the 75, any pullback towards 80 would set up a short with a destination, a swing destination of 54 as a structured trade. And that trade showed up right in here, 75, approximately right here, dropped, pulled back to 79 and a quarter, and then rotated down, ended up zigzagging, which I don't really like, but giving us here 12 points immediately before actually coming back to trade the market generated, the day generated numbers up here, confluence, and so on. So to me, you know, the key levels that I outlined were from top to bottom: 15, 11, 12, 07, the 4700, 00, and then I was looking at 90, 85, 75, and 54.75. Those are the key figures, and we stopped at 700 on the upside, and we pulled down into 63 on the downside. Didn't quite hit the 54.75, although we're very close to it this morning with the overnight low at 56.75. So that trade was pretty solid. They don't always work out that way, but that trade was pretty solid. Yesterday, we spent most of the session with Delta being negative. We spent most of the session below the mid. This is a legit B-shaped profile right here. A legit B-shaped profile. This is a market that is rejecting unfair prices up higher and is moving lower. What the heck is this? Rejecting the higher prices, and I'm finding equilibrium down at the 46.75. The 46.75 has a lot of confluence there. We've done a lot at the 46.75. If you look at a 60-minute and go back to last week, you'll see that we tested from below, we tested from above, and there's a lot going on there. And then we ended up putting in a point of control for yesterday at 46.75. The POC is exactly 46.75. And as I talked about yesterday in the session, the 46.75 was definitely the line in the sand for me, and it ended up being the chop area for the entire session. So we did not hold the prior range low at 86.75. We just were weak. It was a day of just selling rallies, selling rallies, selling rallies. Unfortunately, once it pokes through the IB, once the IB stat was done right here, it was wiser to just sit still, because it started to put in these higher lows and grinding its way up, and it was really hard to tell what to anticipate. So this is what we had yesterday, and that sets up the context for today. Carries over into today, where we are we open up from at settle, pull back, and then immediately fall through. Europe comes in and pulls us back to settle, unable to hold on to settle, and we move away. This is a relatively weak market. Yes, we have a multi-distribution profile, but really it is a balanced profile, and we're right on top of the 6150 overnight point of control. We have the mid and VWAP above us, and we are trading basically at yesterday's low. Yesterday's low being 63 and a quarter, and here we are trading at 62 and a quarter. So for me, this looks weak. However, because we're in an uptrend overall on the weekly, and we are really continuing to push highs, the day the daily one-time framing broke yesterday. We took out the prior low, so we ended up with an inside day on Monday, and we broke down yesterday. And I'm hoping this would be the type of market that actually goes back and checks the weaker structures below. I expected a test of the 46.54 and 50 at some point in yesterday's session. We didn't quite get there. We made a move, and then we just completely went sideways for the rest of the session, so it was one and done. But overall, this is looking kind of weak, and I talked about this being or looking weak since Monday morning's Trader Bite, given how Friday closed. Friday's close was very clear that the buyers just didn't have it in them anymore, and when buyers don't have the oomph anymore, prices would likely advertise lower to entice more buyers to come in if the trend were to continue. And that's what we're doing today. So we are already at the low. We are likely to breach yesterday's low, and we are setting up for lower highs or one-time framing down, depending on how we close today. So that's the key thing to look at today. Looking at the overview, interestingly, there's the monthly VWAP in the S&P right at 57.25. Again, that coincides. That's in the area. Remember not to think in accuracy in terms of accuracy in trading. It's in the zone of that 54.75. So this is the pullback that this is really the main reason I'm watching these monthly VWAPs. I watch monthly and weekly VWAPs just to see how the market's behaving against the most recent auction. I like the VWAP. The only moving average I look at actually is the VWAP because it is volume based. It's not bar based. The VWAP is the VWAP regardless of the time frame chart that you're looking at. And as you can see, it's pulling back across the board. We were disconnected, or we had separation for a while, and we're already back into our VWAPs. The Russell being relatively strong, the Russell was very defiant yesterday and really hung out at higher prices. Here's the breakout in gold. We talked about this on Monday as well. Gold really breaking out that's supported today by the inflation numbers. I still think gold is a poor storage of wealth and a poor hedge against inflation. Gold bugs disagree with me, but I've owned gold for 25 years and it just hasn't gone anywhere. So I don't know how that's a wealth storage tool. It's just a rock. But anyway, so the metals are breaking away. The yields are pushing lower, surprisingly. With today's news, the 10-year is pulling back, but the bonds are not. And you can see that the currencies are also tangled up with their VWAP. So this is the overall picture. But what we're seeing today is let me look at the active. What we're seeing today, though, is a pretty busy market. So I expect opportunities to be decent coming into the session. So this is not a day. I believe this is not a day you'd want to blow off. Let's move into our expectations segment here and be wrapped up in a couple minutes. There we go. Charts set up. Okay, what are we looking for today? So, the reason we do the review of the prior session, and the reason I'm taking the time to do that, just to be clear based on the comments here, and I get it, the reason I do that is because the entire premise of what we're doing is we're trading the narrative. And you don't want to trade the narrative showing up in the middle of something and not being aware of how it behaved, what it accomplished, how good of a job it did, and so on and so forth. The review is the basis of all the scenarios, is the basis for the most important structured trades. So the review segment is important. I just don't need to show you what was shown the prior session. You can go do that on your own. But I would never get rid of the review segment because we're trading a story. This is an auction, and an auction is a story. And so it's important to understand what that is in order to understand what it's trying to do. For example, we know that yesterday, breaking through that 86 and staying below it for the entire session, the high after the drop was 85. Knowing that means that if the market pushes above 86, we can see from the review segment that we are likely to run right back up to 90 immediately, but also we have this equilibrium up here and a higher prior point of control at 95. So that tells us, the prices are not just prices. The prices tell a story, and the volume profile is there to tell us how much interest there is in every price. Whereas a bar chart, or looking at a bar chart, coming in, looking at a bar chart and just going to work, or looking at even a volume profile and going to work without understanding how that volume profile was formed is very misleading. Could have you thinking short when the market's looking to buy. So I recommend, even if you don't watch or you stop watching, I recommend that you play back or go through how the market generated those prices, and especially how did it generate that profile. It is not lagging data. It's not just statistics. It is what the market actually did. And it's really important to understand what the market is accepting versus what the market's rejecting. That's really what we're trading. That's what everybody's trading, even algos. That's what they're trading ultimately. They're trading acceptance versus lack of acceptance, and that's all represented here in these charts. So looking at today, so here's what we're facing. See this down here? This becomes the really important area to test. Down at 46.18, this point of control right here. If we give up this 54 today, we have a large gap until the next stock zone. Why? Well, that gap the stock zone represents the single prints because we have this weak structure. The market really ran away last week and last Wednesday or Tuesday, and we have very weak structure there. So once we give up the 54, we really have a little bit of support at 51 and then the 50, and if it pushes through the 50 and bounces, if we have a weak bounce, that's another short looking for 32.75, 33 as a target. So as you can see here, this is pretty weak structure here. There's very little on the composite profile. It's really important to note that. This morning, looking for an open auction that rebalances, that pushes back into the 74.75. I'm looking for this thing to falter at the 74.75. And then I'm looking for it to turn over and simply push through the 54, potentially bounce. And then once it breaks through, I'm looking for it to really drop here. And this could happen because we have some macro news, really important macro news, that is likely to drive the Fed, drive monetary policy, as well as possibly fiscal policy. And so this is a big change. So I'm looking for 33 down here on the downside, 33. And if it doesn't hold, if the 33 doesn't hold, then we're looking at 18 below that. We have a single print at 21, but we're looking for 18 below that if it doesn't hold. So to me, this is a really important day for the market. If the buyers are going to stage a comeback, we're going to have a bottom and a rally back up to 47.11. This is the place to do it. Once we get below the 54.50 and get into this weak structure, it's likely to push into 4600 before we find a bounce. So something big has changed here, and we all need to recognize it. The market is not getting the kind of inflation numbers, and inflation is a huge drag on everything, on earnings, on the cost of money, everything. So it's a serious issue. The secondary scenario is looking for a push into 54, test the 50, poke through, consolidate, pull back to the 50. So I'm looking for this higher low and impulse back to the open. Once that happens, the shorts are off. I'm not taking any more shorts, and I'm looking for it to actually get back to settle for the settle statistic at 46.7850, and then potentially into 80. And the big target up above, if a true squeeze happens, is the MC point of control at 90. 90 becomes the key target for the secondary scenario before it rests. These are the two key scenarios here. We're opening right at the low of the prior session. It's opening weak, but buyers can come in at any point. There's probably some reason for somebody to deploy some, billions of dollars today, and they may do so. But in either case, we expect the range to be wider than normal, and we expect pretty decent activity today following in today's news. Good luck, and I'll catch you tomorrow morning. Be safe and mind your risk, okay? Take care.